Good morning, student. Today is my lecture number 22A for 11th class Accountancy, and I am going to teach you today accounting for goods and service tax called GST. Goods and service tax, GST. In this chapter, I will learn, and our learning objective will be meaning of GST, taxes merged into GST, GST rate structure, objective or advantage of GST, type of tax under GST, and accounting procedure. So today I will teach you theoretical part of GST. First, meaning of GST. Goods and service tax. GST is an indirect tax. It is an indirect tax levied on the supply of goods and services. It is a nationwide tax seeking to unify several indirect taxes and is based on the principle of one nation, one tax. GST Act passed in the Parliament on 24th March 2017, and it come into effect. It passed in Parliament on 24th March 2017, and it come into effect from 1st July 2017. 1st July 2017. GST has replaced many direct taxes levied by central and state government. Central government tax that have merged into GST is taxes. Suppose taxes merged into GST by central government is, suppose GST of central government, central level, merged first is excise duty, second is custom duty, third is service tax, and fourth is central sales tax. So these four taxes have been merged in GST by central government. Now some other tax also which is merged by state government. Now merged by state government, GST, first is octroi, tax, second is purchase tax, third is entertainment tax, fourth is VAT. VAT means value added tax, fifth is luxury tax, and now last is sixth tax is taxes on lottery. So these are the tax merged by state government in GST, and there are four tax: excise duty, custom duty, service tax, and central sale tax are merged into GST by central government. Now GST rate structure. GST rate structure means goods and service are divided into 5 slabs for collection of GST. So first is essential item, items including food, there are no GST. It means 0%. Second is common use item. Common use item on it 5% GST implemented. Third is standard rate, then 12%. Fourth is maximum goods and all service standard rate is 18%, and luxury item it is 28%. GST is paid on purchase of goods and services, and it is collected from customers on sale of goods and services. GST paid termed as output GST. GST paid termed as output GST, and GST is when collected, then GST paid is input GST, and GST collected is output GST. By mistake it has been written in other order. GST paid will be input GST, and GST collect will be output GST. And it will be setting off against GST collected. As such, GST paid on purchase, input GST, purchase, when we purchase we have to pay the GST. It will be input GST and it will be related to purchase. And as such, GST paid on purchase, input GST, is not a cost for the purchaser but as an assets. Since it can be set off against GST collected on sale. Similarly, GST collected on sale is not an income of the seller, but it is a liability. Now, some advantage of GST. Advantage or objective of GST. The cost of goods will decrease since tax is eliminated in GST regime. In the pre-GST regime, there were many indirect taxes levied by both center and state. For example, we can say that center charged excise duty on goods manufactured and state charged VAT on the same goods. This lead to a tax on tax, also known as cascading effect of taxes. GST avoids this cascading effect as the tax is calculated only on the value added at each stage of transfer of ownership. So, we can say that first advantage should be decrease in the cost of goods, because now only one tax is charged. Only one goods, only one tax. Now, second point may be ease of doing business. GST harmonizes tax administration between the central and the states, which will improve the easy doing of business. Third objective may be reduce tax evasion, means electronic return filing and assessment will reduce tax evasion and compliance costs. Now, fourth may be transparent. Tax system become more transparent, regular and predictable. So these are the advantage of tax. Now, types of GST. First is CGST. means central GST. Second is SGST, means state GST, or it is also UTGST, Union Territory GST. Both of these taxes are levied on intra-state sales, that is, within the same state. For example, a dealer of Rajasthan sells goods to a dealer or consumer in Rajasthan worth 50,000. Suppose the GST rate in the goods is 12%. A dealer of Rajasthan sold the goods of customer to Rajasthan rupees 50,000 and the rate of GST is 12%. Then this rate will comprise of CGST and SGST. Both. The seller has to collect 12% of 50,000, that is 6,000, of which 3,000 will be CGST and 3,000 will be SGST. It means 6% CGST and 6% SGST. CGST will go to the central government and SGST which will go to the Rajasthan government SGST. Now, third is integrated GST called IGST. It is levied off on interstate sales, that is sales of goods and services outside the state. It is also levied on import of goods and services into India and export of goods and services from India. For example, a dealer of Rajasthan sells goods to a dealer in Madhya Pradesh worth 50,000. Suppose IGST rate is 12%. In such a case, the seller will charge 6,000 is as IGST. 6,000 will be charged as IGST, and this entire amount will go to the central government only. So, these are the three types of GST. I repeat once again: CGST, SGST, and IGST. SGST means intra-state, IGST means intra-state, and SGST means intra-state, and IGST means interstate. Interstate. So these are the difference between IGST. IGST is implemented in case of one state to other state and one nation to other nation also. But SGST is implemented in case of within a state. This is called intra-state. Intra-state. So this is the theoretical part of GST. Now I will meet in next video with some new topic. Thank you very much.